are you looking at for indicators and signs this week that could affect the currency?
Morning, David. It actually looks like a relatively quiet week on the data front. Domestically, we're only really looking to PPI to have any potential impact on the currency, and offshore we're looking at, I think, the EU advanced or flash PMI estimates that are out this week, most likely going to be the most important ones towards the end of the week. There's also some revised estimates of the US GDP, and that would be important because it does look like the market's looking for that number to be downwardly revised. So I think on the whole, relatively light week, but some pivotal moments nonetheless.
Reserve Bank leading indicator?
That'll also be out this week, but very rarely does it have market moving potential or implications. It's mostly because it's based, it comes out, it's relatively dated and based very much on historical data. So I don't think that the market pays too much attention to it, although of course it is obviously a useful indicator of where the economy is potentially headed a few months out.
That GDP revision, it sounded rather similar to ours, the United States one. 2.5 was a number that was being thrown around. Ours has been 2.7 officially, and several of the private commentators have said it's going to be lower than that. Where are we expecting that US number to come in?
So far, it looks like the consensus estimate is 4. Now, this would be for second quarter growth, and that's for that to be been revised downwards. I think they had a number of 0.8% quarter on quarter initially, and that looks like it could potentially be downgraded to 0.5%. But I think, it's still at the start of the week, and those expectations could adjust marginally by the time we get to Friday's final number.
We were talking earlier about Greece and Spain. The Greeks are asking for more leniency on the austerity package, and they're being inspected by what's known as the Troika to check if they're doing what they're supposed to be doing. And then, of course, Spain, provincial requests for more money, bond yields still very high, the effects of that. Nothing new, but a confirmation that things aren't getting better.
Yeah, absolutely. I think most of the news that's come out of Europe recently, or this morning certainly, has been relatively disappointing. And you can see that, the euro is under great pressure, down below that 121 against the dollar level, and certainly consistent with our forecast, because we've been calling for euro dollar to go to about 115. And that's been largely premised on our view that things in the eurozone are certainly likely to get a lot worse before they get much better. There are some encouraging signs, particularly on the political front, of EU leaders increasingly moving closer together with regards to integration and finding a permanent solution to this debt crisis. But in the near to medium term, we don't see, we're not certainly very optimistic, and certainly we see the euro potential for much greater turmoil in the euro area and potential for much weaker euro-dollar exchange rate.
Well, as you say, it's a quiet week. Where do you expect the currency to go? Towards the end of last week, it was 8.14 and 8.38 this morning.
Yeah, well, certainly that decline in the rand has a lot to do with what we're seeing in terms of global growth fears having come back to the fore, but also you can't discount the impact of the MPC's rate cut, surprise rate cut last week. To a large extent, much of what had been propping up the rand was these continued inflows into the bond market, offshore investors seeking yield, and to some extent, now that the repo rate has been cut to 5%, that yield advantage has been compressed somewhat. It's likely to have an impact on the rand in the short term, but going forward there are still some signs or potential for continued inflows into the local bond market by offshore investors due to that South Africa's inclusion in the WGBI index. So in the shorter term, certainly some potential for rand weakness, but we don't see it weakening much more beyond these levels. We're sticking to our year-end target of about 860 to the dollar.